Hello, my name is Levio. I'm the founder of InterAnalyst. I don't want you to get too intimidated here when you're looking at these charts because it really will boil down to a simple red and green arrow system. But I just want to show you the background and the history of the signals using the 3 DNA markers. Okay, the top chart here, this one here, is the momentum indicator. When the green line is above the red line, it means that the market is bullish, or that particular asset is bullish, and vice versa. If the red is above the green, it means it's bearish on a very short-term basis. The middle chart is a trend indicator or intermediate term indicator, and the same is true of the red and green lines. If they're above the red, the green will mean it's bullish, and vice versa. The bottom or the third indicator is the signaling indicator, and as you see the red and the green triangles. Same thing is true of this. If the market is above the red line, it is bullish. If the market is below the red line, it means it's bearish. The key to understand here is simple. All three must be in line in order for us to take the signal. So for example, we go down here right to the bottom left, and you'll see we got a bullish signal. All three, as in this case here, you see the green is above the red, and the same is true up here, which means it's bullish. We take that signal and we write it all the way to here, where we look at our indicator and we can see that it's bearish here when we got our signal, and the same is true here. Look, the green is below the red, and the green is below the red here as well. So we take that signal and we get out of the market to preserve what we've grown. So you can see here in 1958, we took a bullish signal because this was above the red line. Above the red line, the same was true up here. Not every signal, for example, is taken. Let's go ahead here and go up, for example, to right here. Okay, we see that here, even though this was red and got a signal, the green was below, but in this case above, the green was above, which means we ignore this signal and we continue to stay in the position that was green here, all the way up to the next signal, okay? And the next signal occurred in 1966, and this was a bearish signal, this was bearish, and you see the green was below the red. We took that signal, we got back in here, but we, once again, as you can see here, we got the signal, but the green was above the red, and we ignored it, okay? That's how it works. It confirms everything and has been deadly accurate. You can see it work all the way through. In this case, it's 69. Once again, the green didn't cross in 1971, so we ignored this and we rode the market all the way up to the top where we got out when it did actually go bearish here. So at this point, you would have avoided a 67% decline in your money in your retirement accounts. Think how far ahead you'd be if you'd started over here with the money you had up here, while others got crushed. This is the power of the indicator. Now here's the key. We went, by using this visually, to an algorithm that combined all three. And now I'm going to show you, by combining all three and optimizing it, where we started in the 1990s and how easy this is to follow for you. As you see right in front of you here in the lower left, you see the charts all combined into a signaling system. So as we go through the 90s, we all remember the bullishness of the 90s and how tremendous that growth was. So when we took this green signal, we followed it all the way up. Now let's take a look at what happened in 2000. So we see here the beginning of the 2000 crash, we got a red arrow, which means, as you remember in the charts, all three agree. So we took that, issued the signal to all our subscribers, and they avoided the 3-year bear market until 2003. In 2003, we got agreed upon signal for all three of the DNA markers. We got back into the market and rode it all the way till 2008, at which time we got out and preserved our money for the entire crash of 2008. We rode that all the way up since 2009, and we're prepared for the next stock market crash. That's how the indicator works. Best of all, it works not only on this monthly indicator, it works on the weekly and the daily as well. Thanks for taking the time to look at the algorithm we developed from all our extensive research into a system that's used within all of our subscriptions. Thank you.